Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine foreign subsidiaries. If you are coming across my lecture for the first time, please like the video, also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. What is foreign subsidiaries? A foreign subsidiary is a subsidiary that is located in a country different from the country where the parent company is located. A subsidiary that is located in a different country from the parent company. For instance, if the parent company is located in Nigeria, and subsidiary is located in US. So it means the country where the subsidiary is located is different from the country where the parent company is located. So the transaction by the parent will be conducted in Naira in Nigeria, while the subsidiary, their own transaction will be done in US dollar. So it means since they are the transactions are conducted in different exchange rates, before the subsidiary operation can be consolidated with that of the parent, the foreign currency, the exchange rate of the subsidiary operation needs to be translated to Naira before they can be consolidated. We want to examine the terminologies, definition of terms. Number one term we will examine is exchange rate. Exchange rate. Exchange rate. Exchange rate is the rate of exchange between two currencies. The rate of exchange between two currencies, that is exchange rate. If a dollar, if it can be translated, if it can be exchanged with 1,600 naira, that means the rate of exchange, $1 will be equal to 1,600 naira. So if you are having $100, if the value of the transaction, if it is $100, and if you want to translate it to naira, you have 100 times 1,600. That will be 160,000 naira. So that is exchange rate. Number two, we have the spot rate. Spot rate. Spot rate is the exchange rate at the date of the transaction. The exchange rate at the date of the transaction. If the transaction happens today, if the transaction takes place today, the exchange rate as at today will be the exchange rate of that transaction. It is possible purchases might have taken place in the past, maybe last year, and the settlement might happen this year. So you can discover that the exchange rate as at the time of purchase will be different from the exchange rate at the time of settlement. That the spot rate at the time of purchase, the rate of exchange as of then, that is the spot rate as of then, and which is the historical rate since the transaction has taken place in the past. But at the time of settlement, which is happening today, the exchange rate as of today, the time of settlement, that is the spot rate. Number three, we have the closing rate. Closing rate. Closing rate. Closing rate is the spot exchange rate at the end of the reporting period. The spot exchange rate at the end of the reporting period. The exchange rate as at the statement of financial position date. The exchange rate at the balance sheet date. That is the closing rate. Then number four, we have functional currency. Functional currencies. Functional currency is the currency at the primary economic environment in which an entity operates. The currency at the primary economic environment in which the entity operates. If the entity operates in US, the currency in US is dollar. That means the functional currency of that entity is in US dollar. If the entity operates in Nigeria, the currency in operation in Nigeria, the currency in use in Nigeria is the Nigerian naira. So that means the functional currency of the entity that operates in Nigeria will be the Nigeria naira. That is functional currency. Number 5, we have foreign currency. Foreign currencies. Foreign currencies. Foreign currencies are the currencies other than the functional currency of the entity. Any currency different from the functional currency of the entity, we refer to that currency as the foreign currency. For a business located in Nigeria, Nigerian naira is the functional currency in Nigeria. Any other currency apart from naira, dollar, pounds, and other currency like that, they are foreign currency to Nigeria business. So number 6, we have presentation currencies. Presentation currencies. Presentation currency is the currency in which the financial statements of an entity are presented. The currencies or currency in which the financial statements of an entity are presented. If the financial statements are presented in Nigeria, that means the presentation currency will be naira. If it is presented in dollar, if the entity is located in US, that means the presentation currency of the US business will be US dollar. So that means the currency in which the financial statements of an entity are presented, refer to that currency as the presentation currency. Therefore, we want to examine the procedures for preparing the consolidated financial statements of a foreign subsidiary. Consolidation procedures. Consolidation procedures. At least we mean the procedures for preparing the consolidated financial statements of a foreign subsidiary, or the steps to follow. The first procedure or the first step is to draw the group structure. Draw the group structure. The group structure is a diagram that shows the relationship between the members of the group. Group structure is the diagram that shows the relationship between the members of the group. We have different forms of group structure. We have the simple group structure, which may contain one parent and one subsidiary. Maximally, that is, if it is more than one subsidiary, that means you could have one parent, one subsidiary plus an associate. So that is simple group structure. We have the complex group structure, which will take the form of the fellow subsidiaries. That is where 2 or more companies are subsidiary of the parent, which are not subsidiaries to one another. That is fellow subsidiaries. Then we can also have vertical group as a form of complex group structure. We could have a sub-subsidiary. That is where an entity is a subsidiary of another entity, which is self a subsidiary of the parent. An entity is a subsidiary to another entity. That other entity is a subsidiary of the parent. That is sub-subsidiary, which is vertical group. And it may so in terms of a vertical group, that is sub-subsidiary, the parent will be exercising an indirect control over the sub-subsidiary company. Then we can also have a mixed group. That means in a mixed group is also a form of sub-subsidiary, but parent will have both direct the parent will have a direct and indirect controls. So that means the effective interest will now comprise both the direct and indirect interest. That is a mixed group or a D-shaped group. The first step is to draw the group structure. I've told you the group structure is a diagram that explains that shows the relationship between the members of the group. The second step is to update and translate the financial statements. The financial statements of foreign subsidiaries. Subsidiary. So there are two things that are put together. The number one is updating. Updating. That is the first thing there. Updating means you should carry out the necessary adjustments. Updating means to carry out the necessary adjustments in the functional currency of the entity. Every adjustment needed, you do them in the financial statements of the foreign subsidiaries. So you don't consolidate yet, you carry out the necessary adjustment. Maybe if you have the fair value gains, everything in accounting is done in line with double entry, which have not been recorded. You have the fair value gains. The double entry is to debit the asset that was revalued, and then you credit the net asset at the date of acquisition. So you carry out the necessary adjustments, and I've told you that the adjustments must be made in the functional currency of the entity. So the currency of the primary economic environment in which an entity operates. So you carry out the adjustment in foreign currency. Then the second thing here after update is to translate. Translating. It means you translate the financial statement from the foreign currency to the presentation currency of the parent. You translate the financial statement of the foreign subsidiary, you translate them to the presentation currency of the parent before you can consolidate. Now, I've told you to do that, you will need the exchange rates. Now, when you are translating, I want you to note the following: assets and liabilities. Assets and liabilities. You translate them at the closing rate. Closing rate. Translate assets and liabilities at the closing rate, closing exchange rate. Take note of that. 2. Share capital. Share capital of the subsidiary. Share premium. Share premium. Pre-acquisition profit or pre-acquisition retained earnings or pre-acquisition reserves, or fair value gains or deficit on acquisition. Fair value gains or deficit that arises on acquisition or that arises at the date of acquisition. You translate them at exchange rate at the time of acquisition, or exchange rate at the date of acquisition. Then 3 or C, the post-acquisition profit. Post-acquisition profit or post-acquisition reserves. This should be a balancing figure. balancing figure. Post-acquisition profit or post-acquisition reserves should be a balancing figure. This is step 1. This is step 2. Step 3. Calculate the goodwill in foreign currency. Calculate goodwill in foreign currencies or currency. So when you are calculating goodwill, you know those items to consider. Your goodwill, we normally have purchase consideration, then we have the NCI, that is the non-controlling interest at the date of acquisition. NCI at acquisition, it depends on the group policy, which could be proportionate shares of the net asset of the subsidiary or fair value. Then we also have less the fair value of net assets at the date of acquisition. This will give us the goodwill, and our goodwill could be impaired. So you calculate the goodwill in foreign currency. The calculation must be done in the foreign currency. Then the step number 4 is to calculate the exchange gains or loss on goodwill to be included in the consolidated retained earnings. Calculate the exchange gains or loss on goodwill to be included in the consolidated retained earnings. It means these exchange gains or losses will be added to the consolidated retained earnings. So to calculate this, you have the goodwill at opening exchange rate. The goodwill, the exchange rate at the beginning of the accounting year. If the year end is December 31st, for 2025, the beginning will be January 1, while the end will be December 31st. The exchange rate as of 1st of January, which is the beginning of the accounting period, that rate will be used to translate the goodwill calculated in step number 3. Then goodwill at opening exchange rate. Then we also have goodwill translated at the closing exchange rate. I've told you the closing exchange rate is the exchange rate at the balance sheet date. So the difference could be exchange gains. Exchange gains, if it is negative, it is gains. That is, if the closing one is more than the opening, then you have a gains. That means this figure, let's assume this is 30,000 and this is 40,000. You have minus 10,000. That 10,000 is a gains. Or loss. Exchange gains or loss. If it is positive, it is a loss. So this exchange gains or loss will be included in the consolidated retained earnings. You add it to the consolidated retained earnings. That is step number 4. Step number 5, calculate the consolidated retained earnings. consolidated retained earnings. You start with parent retained earnings as per statement of financial position. Then we also have parent share or post acquisition retained earnings of, if you have, let me say, subsidiaries, because you may have more than one subsidiaries, you may have foreign and non-foreign. So I believe you know how to calculate the post acquisition profit of the non-foreign subsidiary, which will be done through the summary of subsidiary net asset. I'm not repeating that here because I believe you are already used to it. But the question I will solve in this video will contain the non-foreign subsidiaries and the foreign subsidiaries. Then, exchange gains. Exchange gains on translation of goodwill. Exchange loss on translation of goodwill. If it is loss, you subtract. Then you have the consolidated retained earnings. The necessary adjustments for realized profit, for depreciation and others will need to be done. But I believe you are used to those adjustments in my earlier videos on consolidated financial statements. Number 6, calculate the non-controlling interest. Interest to be included in the consolidated statement of financial position. Finally, prepare the consolidated statement of financial position. These are the procedures or steps you need to follow when solving the consolidated financial statements of the foreign subsidiary. Please watch this video to the end for better understanding. ICAN May 2017 corporate reporting question number 1. Rapuya PLC is a Nigerian public limited company operating in the mining industry. The draft statements of financial position of Rapuya PLC and its two subsidiaries, Puta Limited and Soma Limited, as at April 30, 2017 are as follows. We have Rapuya in million naira, Puta in million naira, Soma in million DEFA. Non-current assets. We have property, plant and equipment, 740 million, 220 million naira, 760 million DEFA. Investment in subsidiaries, Puta 226 million naira, Soma 184 million naira. Financial assets, 30 million for Rapuya, 40 million for Puta, 100 million for Soma. We have total non-current asset of 1,180 million naira for Rapuya, 234 million naira for Puta, 860 million DEFA for Soma. Current assets, Rapuya 236 million, Puta 200 million, Soma 660 million. Total assets, 1,460 million naira for Rapuya, 434 million naira for Puta, 1,520 million DEFA for Soma. We have equity, which comprises share capital, Rapuya 360, Puta 76, Soma 400. Retained earnings 604 for Rapuya, 112 for Puta, 600 for Soma. We have other components of equity. Rapuya 14, Puta 8, Soma 9. The total equity for Rapuya is 934, Puta 196, and the Soma 1000. Non-current liabilities, Rapuya 112, Puta 84, Soma 320. Then we have current liabilities, Rapuya 370, Puta 154, Soma 200. Total liabilities, Rapuya 482, Puta 238, Soma 520. Total equity and liabilities, Rapuya 1,416 million, Puta 434 million, and Soma 1,520 million DEFA. The following information is relevant to the preparation of the group financial statements. 1. On May 1st, 2016, Rapuya acquired 52% of the ordinary shares of Soma Limited, a foreign subsidiary. The retained earnings of Soma Limited on this date were 220 million DEFAs. The fair value of the identifiable net assets of Soma Limited on May 1st, 2016 was 990 million DEFAs. The excess of the fair value over the net asset of Soma Limited is due to an increase in the value of non-depreciable land. Rapuya PLC wishes to use the full goodwill method to consolidate the financial statements of Soma Limited. The fair value of the non-controlling interest in Soma Limited at May 1st, 2016 was 500 million DEFAs. Soma Limited is located in Tom, a small country in West Africa, and operates a mine. The income of Soma Limited is denominated and settled in DEFAs. The output of the mine is routinely traded in DEFAs, and its price is determined initially by local supply and demand. Soma Limited pays 30% of its costs and expenses in Nigeria, with the remainder being incurred locally and settled in DEFAs. Soma's management has a considerable degree of authority and autonomy in carrying out the operations of Soma Limited and is not dependent upon group companies for financial support. The finance controller is not certain from the above whether the DEFAs or Naira should be taken as the functional currency of Soma Limited. There have been no issue of ordinary shares and no impairment of goodwill since acquisition. 2. Also on May 1st, 2016, Rapuya PLC had acquired 70% of the equity interest of Puta Limited. The purchase consideration amounted to 226 million Naira, which Rapuya PLC paid through bank transfer in compliance with the cashless policy of the federal government of Nigeria. The fair value of the identifiable net asset recognized by Puta Limited was 240 million Naira, excluding the patent below. The identifiable net asset of Puta Limited at May 1st, 2016 included a brand which had a fair value of 8 million Naira. These have not been recognized in the financial statements of Puta Limited. The brand is estimated to have a useful life of 4 years. The retained earnings of Puta Limited were 98 million Naira, and other components of equity were 6 million Naira at the date of acquisition. The remaining excess of the fair value of the net asset is due to an increase in the value of non-depreciable land. Rapuya PLC wishes to use the full goodwill method in consolidating the financial statements of this subsidiary. The fair value of the non-controlling interest in Puta Limited was 92 million Naira. On May 1st, 2016, there have been no issue of ordinary shares since acquisition, and goodwill on acquisition is not impaired. Note 3. The following exchange rates are relevant for the preparation of the group financial statements. We have DEFAs to Naira. May 1st, 2016, 3 Ratio of 3 to 1. 3 DEFAs to 1 naira. April 30, 2017, 2.5 DEFAs to 1 naira. Average for the year to April 30, 2017, 2.9 DEFAs to 1 naira required. A. Advise the finance controller on what currency should be taken as the functional currency of Soma Limited. Apply the principles set out in IAS 21. The effects of changes in foreign exchange rates. B. Prepare a consolidated statement of financial position of the Rapoya Group as at April 30, 2017, in accordance with International Financial Reporting Standards, IFRS. Show all workings. So, let's have the solution to the question. Solution. So, I've told you the starting point is the group structure. Group structure. You were told on May 1st, 2016, Rapoya acquired 52% of shares of Soma Limited. So we have Rapoya PLC, Rapoya PLC acquired 52% of Soma Limited. Soma Limited. That is the information about the acquisition of Soma Limited. Note 2. Also on May 1st, 2016, Rapoya PLC had acquired 70% of the equity interest of Puta Limited. Rapoya also acquired 70% of Puta Limited. So, this relationship is fellow subsidiary. So, after the group structure, let me have this as working one. The next step is to update and translate the financial statement of the foreign subsidiary. Working number 2. We have updating and translating. Updating and translating of Soma Limited statement of financial position. So there are two things you want to do here. The first thing is updating, and the second one is to translate the financial statement of Soma Limited. You know, Soma Limited is the foreign subsidiary, and the presentation currency of Soma Limited is DEFA. So you want to translate the financial statement of Soma Limited from DEFA to Naira. Naira, exchange rate, then you have the currency in DEFA. So, in the financial statement of Soma, you have property, plant, and equipment of 760. Property, plant, and equipment. $760 million DEFAs. Then we equally have financial assets in the financial statement of Soma Limited. So financial assets. Financial assets of 100 million. Then you have total assets. total, we have current assets. Current assets. The current assets of Soma Limited amounted to 660. We have 660 million. Then after this, you have total assets. After total assets, we have share capital, 400, and retained earnings. So we have share capital, 400. We have retained earnings. The retained earnings amounted to 600. And this 600 will be divided into two, the pre and post. Pre-acquisition retained earnings and post-acquisition retained earnings. So the total is 600. Then we have non-current liabilities of 320. Non-current liabilities. Non-current liabilities. 320. Then we equally have current liabilities of 200. Current liabilities that amounted to 200. Then after that, we will have total equity and liabilities. So what I've done was the lifting of what we have in Soma Limited statement of financial position. So we lift them directly. The only thing that I have not written is the retained earnings of 600. No, this 600 million, I've told you, you will divide that retained earnings into two, the pre-acquisition retained earnings and post-acquisition retained earnings. In note 1, you were told on May 1st, 2016, Lapuya acquired 52% of the ordinary shares of Soma Limited, a foreign subsidiary. The retained earnings of Soma Limited on this date were 220 million. DEFAs. So that is the retained earnings at the date of acquisition. That's to show that we have the pre-acquisition retained earnings of 220. So pre-acquisition retained earnings that amounted to 220. Remember, the accumulated retained earnings of Soma Limited in the statement of financial position amounted to 600 million. If you subtract the pre-acquisition retained earnings of 220 million, the difference will be the post-acquisition retained earnings. 600 minus 220, that gives us 380 million. The 380 million is the post-acquisition retained earnings of Soma Limited. The fair value of the identifiable net asset of Soma Limited on May 1st, 2016 was 990 million. That is the fair value of Soma Limited net asset at the date of acquisition. And you were told the excess of the fair value over the net asset of Soma Limited is due to an increase in the value of non-depreciable land. So we need to have the summary of Soma Limited net asset in order to get the fair value gains that will be attributable to non-depreciable land they were referring to. Remember, the total fair value of net asset amounted to 990 million naira. Working 3, summary of Soma Limited net assets. You know, we normally have a column for date of consolidation, date of acquisition, and post-acquisition period. But we did not need the post-acquisition retained earnings here for the summary of net asset. That is why I will not create a column for that, since you will arrive at that in updating and translation of foreign subsidiary net asset. So you have date of consolidation and date of acquisition. And amount is in millions DEFA. So we have, the net asset comprises the share capital of 400. Share capital 400. The same 400 is what you will have in the date of acquisition. Then you have retained earnings. Retained earnings. The retained earnings we have in the statement of financial position amounted to 600 million. Of this 600 million, 220 million relates to the pre-acquisition period. So that means we have the pre-acquisition to be 220. Now, you were given the fair value of net asset at the date of acquisition from note 1 to be 990 million. So that means you were told the difference in fair value is attributable to non-depreciable land, which will be balancing figure. So we have 400 plus 220, that is 620. If you subtract 620 from 990, we have difference of 370. 370. This will be total 1,370. So that means you have fair value gain attributable to non-depreciable land of 370 million. So that means you have fair value gains of 370 from working 3. And what is the double entry for this? It will be added to the net asset at the date of acquisition. Then you will equally add it to the consolidated PPE. Now, the PPE you had before was 760 plus 370 attributable to non-depreciable land. So we have 760 plus 370. That means the value of the PPE at the date of consolidation will be totaled 1,130. So the second leg of this will be the date of acquisition, fair value gains. Fair value gains attributable to non-depreciable land, and that amounted to 370. Now, we can total the net asset since there are no, if you check, let's read the information here. Rapuya PLC wishes to use the full goodwill method to consolidate the financial statements of Soma Limited. The fair value of Soma Limited non-controlling interest in Soma. The fair value of the non-controlling interest in Soma Limited at May 1st, 2016 was 500 million. This is the fair value of NCI, 500 million DEFAs. Soma Limited is located in Tome, a small country in West Africa. So these are the information that requires updating. So we can total this 1,130 plus 100 plus 660. So we have 1,890. Then we also have 400 plus 220 plus 380 plus 370 plus 320 plus 200. So this is also 1,890. The total asset must agree with the total equity and liabilities. So after updating, so we've done with the updating process. The next process or the next step is to translate the financial statement from DEFAs to Naira. Now, what are the relevant exchange rates to use? To identify the relevant exchange rate, you have to identify the reporting date. Remember the reporting date, the date of consolidation is started off April 2017. April 30, 2017. That's to show that the rate of exchange in April 30, 2017 is the closing exchange rate. So that means this is the closing rate. Now, Soma Limited were acquired on May 1st, 2016. The 1st of May 2016 is the date of acquisition, is also the beginning of the accounting period. The average for the year is relevant for the consolidated statement of profit or loss. But for the purpose of the consolidated statement of financial position, this one will not be relevant. So, do we need the exchange rate? The closing exchange rate. We said all assets and liabilities should be translated at the closing exchange rate. So, since this is the closing exchange rate, so we are going to translate our assets and our liabilities using the rate of exchange of 2.5. So, which is the closing exchange rate? 2.5. So, it is, this is 2.5 to 1 naira. This currency is in DEFAs, not in naira. So if this is naira and naira carries 1, naira carries 1. Therefore, this 3 is for DEFAs, 2.5 is for DEFAs, 2.9 is for DEFAs. Naira is the one that owns 1. So since naira owns 1, if this were naira and you want to translate it to DEFAs, you will have been able to multiply it. But where the one you want to translate, the one you want to convert, if it is not 1 in the exchange rate, the one you want to translate, if it is not 1, you divide. So the one we want to translate is DEFAs, and DEFAs is not 1 here. So that means we'll be dividing it. So to translate 1,130 being the property, plant and equipment, 1,130 divided by 2.5, that gives us 452. All assets and liabilities at the closing exchange rate. So financial assets 2.5, we have 100 divided by 2.5, that gives us 40. Current assets at the closing exchange rate. All assets and liabilities, we use closing exchange rate. 660 divided by 2.5, that gives us 264. So we've done with the asset. You can sum them up. Let's sum them up. 264 plus 40 plus 452. So the total asset is 756. Then the next thing is equity and liabilities. So I've told you the share capital and items that relates to the pre-acquisition period. I said those items should be translated at the rate of exchange at the date of acquisition. The exchange rate at the time of acquisition is 3. So that means we will translate our share capital and pre-acquisition items using that 3. So we have fair value gains, which also arise at the date of acquisition. We will translate that using the 3. I remember I've told you all assets and liabilities at the closing exchange rate. This is liabilities. We translate the liabilities at the closing exchange rate 2.5, current liabilities 2.5. So I've told you the post-acquisition profit. I said that will be balancing figure. So this will be balancing figure. Our post-acquisition profit should be the balancing figure. Now, 200 divided by 2.5, that gives us 80. Then we have 320 divided by 2.5, that gives us 128. 128. Then we have 370 divided by 3. 123.33. 123.33. Then 220 divided by 3. That gives us 73.33. The only thing that we've not know is the post-acquisition. We said that one must be the balancing figure. 400 divided by 3. That gives us 133.33. So we are left with the post-acquisition profit. You know the total of all this must be equal to the total asset, which is 756. So let's sum them up. 133.33 plus 73.33 plus 123.33 plus 128 plus 80. So this is 537.99. This one is greater, so the difference is 756, which is 218.01. That is the balancing figure. So if you add it to this, it will be equal to this. If the total of the items is greater than this, that means this will be subtracted in order to make it equal to 756. So if the total is greater than 756, that means the post-acquisition profit will be subtracted in order to make it equal. The amount by which it used to be greater than 756 will be subtracted in order to make it equal to exactly 756. Take note of that. So we've done with updating and translation of the financial statements of the foreign subsidiary. Before we start the consolidation, let's have the summary of Puta Limited net asset, work number 4. Remember, Puta Limited is not a foreign subsidiary. So we have summary of Puta Limited net assets. As usual, you will have the post-acquisition period. And this post-acquisition, we will divide it into two: retained earnings and other component of equity. Amount is in million naira. Then we will equally have a column for date of acquisition, DOA. Then we will have a column for DOC. So the equity component of Puta Limited includes share capital. If you go to the statement of financial position of Puta Limited, share capital of Puta Limited is 76 million. Then we also have retained earnings. Retained earnings of Puta Limited is 112. This figure was obtained from the statement of financial position. You also have other components of equity. So the figure obtained from the statement of financial position of Puta Limited is 8 million. From note 2, also on May 1st, 2016, Rapuya PLC had acquired 70% of the equity interest of Puta Limited. The purchase consideration amounted to 226 million naira, which Rapuya PLC paid through bank transfer in compliance with the cashless policy of the federal government of Nigeria. The fair value of the identifiable net asset recognized by Puta Limited was 240 million, excluding the patent below. So you have the fair value of net asset at the date of acquisition, because this information relates to the acquisition date. So, and it amounted to 240 million. You could have a fair value gains or deficit. So you may have gains or deficit. So the date of acquisition, you were told the fair value of the identifiable net assets recognized by Puta Limited was 240 million. So the DOA, we have 240 million, excluding the patent below. So that means the patent given below is not included in the fair value of net asset of 240 million. It's a separate item. So the fair value of the patent that will be given under net is not part of the fair value of the net asset of 240 million. Therefore, we will need to add the fair value of the patent. We will need to add it to the 240 million. So The identifiable net asset of Puta Limited at May 1st, 2016 included a brand which had a fair value of 8 million. Now, let's now add fair value of the brand name. Fair value of brand name, and that amounted to 8 million. That means the fair value at the date of acquisition will be total 248 million now. So, now back to the question. These have not been recognized in the financial statement of Puta Limited. The brand is estimated to have a useful life of 4 years. The essence of the useful life is for the calculation of the subsequent amortization, which will arise from the date of acquisition to the date of consolidation. Now, let's have the amortization of the brand name. Amortization of brand name, which is 8 divided by 8 million divided by, it will have estimated, the brand is estimated to have a useful life of 4 years divided by 4. Now, how many years from the date of acquisition? No, acquisition is 1st of May 2016, and date of consolidation is April 30, 2017. If you count it, it will be exactly 12 months. So that means we have 1 year. So the subsequent amortization will be 1 year amortization. So times 1 year, which is, so 8 divided by 4, that will be 2, times 1, it will be 2. So we will recognize that amortization in the post-acquisition period. So 8 million divided by 4 times 1. Divided by 4, that is 2 million. So the subsequent amortization amounted to 2 million, which will be adjusted in the retained earnings, 2 million. So we will subtract it from the consolidated retained earnings. Now, let's read further. The retained earnings of Puta Limited were 98 million. This is the pre-acquisition retained earnings. That means the retained earnings at the date of acquisition, that amounted to 98 million. Now, back to the question. And other components of equity were 6 million. Other components of equity at the date of acquisition amounted to 6 million. So you were told at the date of acquisition, the remaining excess of the fair value of the net asset is due to an increase in the value of non-depreciable land. That means we have the fair value attributable to non-depreciable land. Any fair value gains or deficit, so will be attributable to land. The share capital at the DOA will be 76 million as well. Then retained earnings post-acquisition 112 minus 98. So we have 14 million. So we put it under retained earnings, 14 million. The other components of equity post-acquisition, 8 minus 6, that will be 2 million. That is other components of equity. So how much is the total here? 76 plus 98 plus 6. We have 180. Let me reconfirm it. 76 plus 98 plus 6. This is total 180. It is supposed to be 240. That means the fair value of land will be, if you subtract 180 from 240, so we have 60. So that means the fair value gains attributable to land will be 60 million. We will equally include that in the DOC column. Now, let me sum up the DOC here. 76 plus 112 plus 8 plus 60. We have 256. So the total of this, 256 minus 2, that will be 254. Then this is totaled 248. This is totaled 2. And this is totaled 12. Now, after the summary of Puta Limited's net asset, we can start the consolidation. So we can have Rapuya PLC Group. Consolidated statement of financial position. Consolidated statement of financial position as at 30th of April 2017. So the starting point, so we have the amount in million naira. So we are starting with the non-current asset. Non-current assets. The non-current assets, we have property, plant, and equipment. Property, plant, and equipment. So we have Rapuya 740 million plus Puta 220 million plus Soma from the schedule of updating and translation of Soma Limited net statement of financial position. We have property, plant, and equipment of 452 million plus. Now, this information is obtained. 452 is obtained from working 2 and working 4. We equally want to obtain another information from working number 4. From the working number 4, you have this summary of Puta Limited net asset. We have fair value attributable to land of 60 million, and that will be added. That is the second leg of it to complete the double entry process. So we have plus 60 million. So, and that will be totaled 740 plus 220 plus 452 plus 60. We have 1472. 1472. Then we have financial assets. Financial assets. Rapuya 30 million plus Puta 40 million plus Soma. We have 40 million as financial asset of Soma. 30 plus 14, that is 44 plus 40, that is 84 million. Then we also have patent. Since we are done with this, let's have patent. That is from working 4. The summary of Puta Limited net asset. So we have patent there. And the patent, the fair value of the patent is 8 million. And the amortization on patent is 2 million. So we have 8 minus 2, that will give us 6 million. So we have patent of 6 million naira. Patent 8 million minus 2 million from working number 4. Summary of Puta Limited net asset. We have patent of 6 million. Then we want to calculate goodwill on acquisition of Soma Limited and goodwill on acquisition of Puta Limited. We want to calculate goodwill on acquisition of Puta Limited. Acquisition of Puta Limited. So we have the purchase consideration. On acquisition of Puta Limited, the consideration given is 226 million. We were told also on May 1st, 2016, Rapuya PLC had acquired 70% of the equity interest of Puta Limited. The purchase consideration amounted to 226 million, which Rapuya PLC paid through bank transfer. The purchase consideration is 226 million. After this, we have the fair value of non-controlling interest. So, and this is given here. Rapuya wishes to use the full goodwill method in consolidating the financial statement of this subsidiary. The fair value of the non-controlling interest in Puta Limited was 92 million on May 1st, 2016. The fair value of non-controlling interest, we have that to be 92 million. If you add the 92 million to 226 million, we have 226 plus 92, and that is total 318 million. 380 million. From this, we now subtract fair value of net assets at the date of acquisition, and this was obtained from working number 4. Working 4. We got this from working number 4. Fair value of net assets at the date of acquisition, and that amounted to 248 million naira. So we will subtract the fair value of net assets at the date of acquisition of 248 million in order to get the goodwill on acquisition of Puta Limited. So if you subtract 248, so we have 70 million. That is the goodwill on acquisition of Puta Limited. So we equally want to calculate goodwill on acquisition of Soma Limited. Remember, Soma Limited is a foreign subsidiary. Working number 6. Acquisition of Soma Limited. So, if you go by the steps I've given to you, I've told you that you will calculate the goodwill in foreign currency, and the foreign currency is DEFAS. So we have purchase consideration. Then after purchase consideration, you have the fair value of non-controlling interest on acquisition. And this is given in additional information 1. It's given in note 1. The fair value of non-controlling interest is given in note 1. How much is the purchase consideration? We were given investment in subsidiaries, Puta, and that investment of Puta or 226 have been used in calculating goodwill on acquisition of Puta. Then we have the consideration on acquisition of Soma to be 184 million naira. This is in naira. So remember, I've told you that goodwill will need to be calculated in foreign currency, not in naira. We have 184 million naira. Then you convert it to DEFAS, and the exchange rate on acquisition is 3 DEFAS to 1 naira. So you have to convert it to DEFAS. So 184 times 3, that gives us 552 million DEFAS. So this is in million DEFAS. Then the fair value of the non-controlling interest on acquisition. Let's go through the additional information. Number 1, though I've rubbed off that from the board, it's no longer in the board. But let me read from the question. The question is on my phone. You were told that Rapuya PLC wishes to use the full goodwill method to consolidate the financial statements of Soma. The fair value of non-controlling interest in Soma Limited at May 1st, 2016 was 500 million DEFAs. So you have the fair value of non-controlling interest to be 500 million. So you have plus 500 million. So if you add the 500 million, 552 plus 500, that gives us 1,052. Then you now deduct the fair value of net assets at the date of acquisition. Then this can be obtained from working number 3, the fair value of net assets at the date of acquisition. From working number 3, the fair value of net assets at the date of acquisition amounted to 990 million. DOA 990. We have this to be 990 million. If you subtract 990 million from 1052, then you have the goodwill to be 62 million. This is the goodwill in DEFAs. So goodwill in foreign currency. This goodwill will need to be translated in order to ascertain the exchange gains or loss of goodwill to be included in the consolidated retained earnings. Working number 7. Calculation of exchange gains or loss on goodwill to be included in the consolidated retained earnings. So you have the goodwill at the opening exchange rate. Opening exchange rate is the exchange rate at the beginning of the year. Goodwill brought forward, that is at opening exchange rate. We have our goodwill to be 62 million. The rate of exchange at the beginning of the year is 3 million. 3 DEFAs to 1 naira. 62 divided by 3, that gives us 20.67 approximately. 20.67. Then you also calculate the goodwill at the closing exchange rate. Goodwill carried forward, that is closing exchange rate, and that will be 62 divided by the closing exchange rate is 2.5. 62 divided by 2.5, that gives us 24.80. So you have the difference of 4.13. That is the exchange gains. We have an exchange gains on goodwill. These exchange gains will be added to the consolidated retained earnings. But the goodwill that will be consolidated now, the closing one, 24.80 for Soma Limited, then plus goodwill of 70 for Puta. Puta, we have 70 million. So we add it 70 plus 24.80, that will give you the goodwill that will be consolidated. So we have goodwill, working 5 and working 7. In working 5 we have 70 million. In working 7 we have 24.80. That will be 94 So that is all about the non-current assets. Now let's total our non-current asset. 1472 plus 84 plus 6 plus 94.8. So we have 1656.8. 1656.8. That is the non-current asset. After non-current asset, we have current assets. Current assets. So the current assets. Current assets. Rapuya 236 million. 236 million. Plus Puta 200 million. Plus Soma. The Soma's current assets amounted to 264 million. 264. So if you now sum up the current assets, we have 236 plus 200 plus 264. So we have 700 million. The current asset is total 700 million. You now add the current asset and the non-current asset plus 1656.8. We have 2356.8. Let me just say 57 to nearest whole number. That is the total assets. We have the total asset to be 2357. After total asset, the next section is equity and liabilities. Equity and liabilities. The first item, so we have equity, which includes share capital. We have share capital of the parent only, share capital. The share capital of Rapuya is 316. So we have 316 million. After the share capital, the next item will be retained earnings. Let's have that as working number 8. The starting point will be the retained earnings of the parent as per the statement of financial position, which amounted to 604 million. Working number 8. We have retained earnings. Amount in million naira. So we start with Rapuya PLC retained earnings as per statement of financial position. From the statement of financial position of the parent, we have 604 million. Then we now have Rapuya PLC. Rapuya PLC share of post acquisition retained earnings of, let's have that of Puta Limited. The stake of Rapuya PLC in Puta Limited is 70%. That means Rapuya will receive 70% of Puta PLC post-acquisition retained earnings. And the post-acquisition retained earnings of Puta PLC amounted to 12 million. Of this 12 million, Rapuya PLC will receive 70%. We have 70% of 12 million. So that will give us 8.4 million. That of Soma Limited. The stake of Rapuya PLC in Soma Limited is 52%. That is to show that Rapuya shares of Soma Limited post-acquisition retained earnings will be 52%. 52%. How much is the post-acquisition retained earnings of Soma Limited? The post-acquisition retained earnings, we have post-acquisition retained earnings of Soma. That is 218.01. 218.01. Of this amount, Rapuya will receive 52%. 218.01. So we have 52% of 218.01. That gives us 113.37. So if you sum them, then we have exchange gains. Exchange gains on translation of goodwill. And this was obtained from working number 7. Working 7, and we obtained 4.13. That is 4.13, which is the exchange gains on translation of goodwill. Then we will include it in the consolidated retained earnings. Now, how much is the consolidated retained earnings? 604 plus 8.4 plus 113.37 plus 4.13. That gives us 729.9. Let me just approximate it to the nearest whole number, 730. So we have 730. From working 8, we got 730. Then, after this, we have other components of equity. Other components of equity. That is working number 9. Working number 9. Other components of equity. The starting point is Rapuya PLC, other component of equity as per statement of financial position. In Rapuya PLC statement of financial position, we have the other components of equity of 40 million. Then we also have Rapuya PLC share of other component of equity of Puta. Remember, the stake of Rapuya in Puta is 70%. The stake of Rapuya in Puta is 70%. And how much is the other components of equity of Puta that relates to the post-acquisition period? We have 2 million. 2 million. So of this 2 million, Rapuya PLC will receive 70%. 70% of 2 million. That will be 1.4 million. If you add it to 14, then you have 15.4 million. So this is the other component of equity that will appear in the consolidated statement of financial position. Remember, Soma did not have other component of equity, so we can approximate this to 15 million to nearest whole number. Other components of equity to be 15 million. That is from working 9. Now let's sum them up. 316 plus 730 plus 15. So we have 1061. Then the next item is non-controlling interest. Non-controlling interest. Let me have this as working number 10. Working number 10. Calculation of non-controlling interest. So you start with the fair value of non-controlling interest on acquisition. Fair value of NCI at acquisition of Puta Limited. The fair value of non-controlling interest on acquisition of Puta Limited amounted to 92 million, which shall be used in calculating goodwill. Then on acquisition of Soma Limited. So the fair value of non-controlling interest on acquisition of Soma Limited amounted to 500 million. This 500 million is 500 million DEFAs. So you want to translate it to Naira. So you have to use the exchange rate at the date of acquisition. So we have 500 divided by 3. That gives us 166.67. Let me just say 167 to the nearest whole number. Then we now have NCI. NCI share of post acquisition retained earnings of Puta Limited. Remember, the stake of Rapuya in Puta is 70%. Therefore, 30% is attributable to non-controlling interest. 30%. How much is the post-acquisition retained earnings of Puta Limited? Now, if you go through the summary of Puta Limited net asset, you have the post-acquisition retained earnings of 12 million. Retained earnings, 12 million. That is from the summary of Puta Limited net asset. So if you calculate NCI now, which will be 30% of 12 million naira. 30% of 12, that gives us 3.6 million, which, let me just say 4 million, approximately, to nearest whole number. Then the post-acquisition retained earnings of Soma Limited. So since Rapuya acquired 52% of Soma, therefore 48% will be attributable to NCI. Now, from the working number 2, where we have updating and translating of Soma Limited net asset, we have post-acquisition retained earnings of 218.01. 218.01. 218.01 million. 48% of that there you have 105 million. Then NCI share of post acquisition other component of equity of Puta. Rapuya in Puta is 70%, so 30% will be attributable to NCI. How much is the other component of equity of Puta? We have that to be other components of equity, 2 million. So Rapuya will receive 30% of that 2 million. That gives us 0.6, approximately equal to 1. So if you sum up this, we have 92 plus 167 plus 4 plus 105 plus, let me just say 368. That is the non-controlling interest. There could be a rounding off error in the solution, is immaterial. Non-controlling interest from working time, we have 368. So if you add it, 1061 plus 368, we have 1429. That is the total equity. After total equity, we have non-current liabilities. Non-current liabilities we have 112 million plus 84 million. Then that of Soma, non-current liabilities, we have 128 plus 128 million. So how much is the total of our non-current liabilities? 112 plus 84 plus 128, and that is totaled 324. Then we have current liabilities. Rapuya, current liability 370. Puta 154. Then Soma, current liabilities 80. Now if you sum them up, 370 plus 154 plus 80, that is total 604. Then if you add the non-current and the current, we have 928 as the total liabilities. This is total liabilities. If you add the total liabilities to total equity of 1429, we have 2357. 2357. This is the total equity and liabilities. So if you compare these total equity and liabilities with the total assets, you can see that they are the same. It is the same as the total asset of 2357. This marked the end of the solution to the question. In my next video, I will solve a detailed question from ICAN November 2024 question number 1, which will involve foreign subsidiary containing consolidated statement of profit or loss. So please drop the love emoji, like the video, and share it with others. Thanks for watching ZICA.